All right. Well, happy Friday, everybody. Good to see you out there. Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am Lisa Raish. I am the Construction CPA. We are dropping the hammer on cash flow problems so you can build things that matter. This week's topic, I decided that we would go with preparing your business for a recession or for a slowdown. And the reason that I've done that is, again, with all the various reports and economic indicators floating around there's again talk again that there may be a recession into the next year, or at least a slowdown. So I thought it would make sense to at least go over, things that you should be thinking about kind of top of mind as you might be watching what's going on in the economic and the political landscape to, ensure that you're at least getting ahead of anything that may pop up in the next 6, 12, 18 months for your business so that, you're not necessarily surprised. When you start to see things shift a little bit, you can get ahead of it, and really prepare yourself for any potential possible downturn there may or may not be. Again, it's easier to plan ahead versus to be surprised by it. So what are we going to talk about? So first, you really want to assess where you are today, right? Not necessarily, what would happen if XYZ, like where are you right now? So looking at your overall cash flow, right? How liquid are you? How much cash do you have on hand? Do you have cash reserves, right? If you have debt, how much debt do you have? How highly leveraged are you? When we are working with our construction clients, especially those that are in the heavier types of constructions, they are very heavily leveraged. Much of the equipment that they used is all financed, and can get very expensive. And so you want to make sure that you understand where your financing obligations are, so that you're aware of what your debt payments would potentially be. Another thing to look at is your margins. Where are you right now? Are you running in a position where your margins are tight right now? If they are tight at this point in time, should there be any kind of negative shift in the economy, your margins in most cases would probably get tighter. So again, where are you from a margin perspective? Are there any places that you can improve upon? And so again, also then looking at your overall profitability on your jobs. Are you on average profitable on all your jobs? Are you profitable, but basic profitable based on what you expect it to be? Like, do you have those large shifts in, oh, we're profitable, but it wasn't as profitable as we thought it would be? Again, where are you with the projects that you're at right now? And then what does it look like for any of the projects that you've already potentially bid on or may have contracts for that just haven't started? Make sure that you understand where all of your costs are going in those projects. So again, if you were to move into a slower economy, how does that, or would it potentially affect any of your margins on any of the projects that you're either running today or you're bidding on today, or you're in contracts or you're contracting right now to start at a later date? So again, looking at anything that's not profitable. Are you doing certain types of services that aren't profitable? If they're not profitable now in a good economy, should things shift and slow down for you, projects like that could potentially sink you. So again, is there an opportunity to really reevaluate all the services that you're providing and potentially deciding that you're no longer going to provide certain services because it just doesn't make sense? They weren't profitable for you in good times. So in bad times, it's really hard to really make a case for continuing to offer that type of service. The next thing is cash. Cash is king. You want to make sure that you have a cash reserve. It's critical for anyone who went through, the COVID periods, where for some of the certain types of construction, some of them were very, very busy all the way through COVID. Others did slow down. What you saw with other businesses that weren't construction is many of them did not have cash reserves. So when the economy, when basically the world shuts down, there is no cash reserves. There are operational costs that are going to continue, whether you are bringing in revenues or not. So, do you have cash reserves in order to satisfy those operating obligations? Again, you probably want to have maybe 3 to 6 months in reserves to cover any operational expenses should you not have any revenues coming in for a period. That's, again, you want to make sure that you build up your cash. Most businesses, as soon as the cash comes in, it goes back out. Or once you actually have a reserve, sadly, a lot of times what we do is we see owners taking distributions or, dividend distributions, so on, which there's nothing wrong with that. But you do want to ensure that you do have a cash reserve on hand so that you can, in fact, cover any operational costs should you have a period where either your revenue dollars that you're bringing in slows down, or actually, is you actually have $0 coming in the door. So what can you do? Like anything else, you want to cut any unnecessary expenses. And this should be something that you're looking at pretty regularly, and not just because you think that there might be an economic shift. We all do it. We all have expenses in our business that once you start to look at them, you're like, oh, we're not actually using that. Or, it's not getting us the benefit that we're looking for. So are there things that you can cut out in order to save that money, right? If you're not spending money on certain things every month because, you're not using them, are you in fact, putting those to the side and building up that cash reserve? If you are doing any kind of reinvestment of your profits, make sure you're reevaluating how you are in fact reinvesting. If that is in some way, again, for additional equipment and so on, are you utilizing that equipment efficiently so that it is in fact generating revenues for you and isn't a cash suck? So again, you want to be looking at the operations a little bit more clearly, especially if there's a feeling that there will be a bit of a slowdown. Again, are you using everything you have as efficiently as possible? You want, minimize the waste in your business. And again, can you negotiate better terms with your suppliers, depending on, what you have? Maybe you have 30 days, maybe you try and negotiate 45 days if that's possible. Again, there are opportunities for, to do certain things. You could potentially, a lot of our clients use subcontractors to do certain types of work. Does it maybe make more sense for you to bring the work in-house versus using a sub, or vice versa, right? It might be more advantageous for you to not have team and utilize subs. Again, it's going to depend on what makes sense for you, but really evaluating where you can find those bits of savings so that you in fact can build out that cash reserve. Really look at the types of not the expenses, but the types of revenue that you're servicing. So one of the things we just talked about was, do you have any services that aren't profitable, right? You want to cut those out, but do you also have the ability to possibly diversify your revenue sources, right? So it's not all coming from one place. Should there be a shift, if you have your revenue split between 2, 3, 4 types of service lines, should one slow, it doesn't necessarily crash your entire business. So again, something to think about, not only cutting a service, but maybe adding a service that might be very easily tangential to what you're doing already, but could help you diversify. Again, not having all the eggs in one basket, right? One service line basket, or one service line with a handful of customers, that kind of thing. Really spreading it out into a couple of different places. So again, if one slows, you don't have a complete shutdown of what you're doing. Again, you don't want to rely on having 1 or 2 major customers. You want to, if you can, diversify your customer base so that, again, should you have a challenge with one customer, that you don't have an overall kind of a domino effect in the rest of your business, where this one customer is 40, 50, 60% of our revenue. Something happens, then that really puts a kink on what you're doing. So can you Not just diversify your service line, but diversify your customer base. So you have more than just a handful of customers. Again, can you do something that's complementary to what you're already doing? Do you have the ability to do some sort of maintenance work or repair work or small renovation work? If you're a custom home builder, do you have the ability to possibly do smaller kind of homeowner renovations? That might not be your sweet spot, but it might be a way for you to diversify your revenue streams, bring in probably smaller bits of money, but less time, right? You could potentially be in and out of someone's home doing a small renovation within 30 days versus it taking 8 or 9 months to build a brand new property that you've built on spec and so on. So again, different things to kind of think about. Where can you do things that are really very slightly tangential to what you're doing right now that wouldn't be too much of a shift. It's just something simple that you can pick up again, creating a couple of small additional revenue streams to kind of diversify your revenue overall. Again, we're going to talk about cash again. You are going to want to focus on the cash that you have, how in fact you are managing it. So how quickly are you collecting those receivables? Now, in any economic conditions, you want to collect them as quickly as possible, but should things slow down, are there things that you can do to potentially collect your receivables quicker? Could you potentially offer some sort of, payment incentives to your customers to pay you earlier or to give you larger deposits upfront or so on and so forth? Again, things to think about, small things that you may want to implement in order to speed up the cash coming in the door. On the other side of it, you want to potentially negotiate payment terms, right? Again, we talked about that before. Can you negotiate terms with your existing materials vendors, your suppliers, any of the subs that you have working for you? Again, can you improve your overall cash position by, getting 5 or 10 more days into that cycle to pay them in order to stretch out the cash you have? So you want to, especially in a slowdown, you want to manage your cash all the time, but in a slowdown, you definitely want to be more vigilant about how you monitor it and when you're monitoring it and looking as exactly where it's going so that you can get ahead of any kind of slowdowns so that you aren't surprised when the cash coming in slows down, but the dollars going out the door still need to go. So again, you have the opportunity with your customers to, ask for specific type of payment terms or incentives. And then the same thing with your suppliers, your material suppliers, your subcontractors. If you have relationships with these people and you've had them for a while, there may be an opportunity for 5 or 10 more days leeway in terms of payment terms. So again, that can really help you, stretch that cash out a little bit farther. Your spending is always something that you want to look at. This not just because if the economy slows down or my business slows down, I want to look at where I'm spending my money and cut costs. No, you want to be looking at that all the time. Again, you don't want to be wasting in your business, right? You want to utilize those assets, that cash asset, those equipment assets, all of those things as efficiently as possible to generate the most revenues that you can, and therefore the greatest profitability out of those assets. So look at where you're spending money. And again, you should be doing that on a regular basis. But where are you spending money? We see it all the time. It's all the little stuff going out. And then when you start to compile all the little stuff, you realize that it is actually a significant dollar. And you don't necessarily think the 100 here, 100 there, 150 there. You start to aggregate those together, those can become a significant number. And if you aren't spending those, can you in fact be putting those dollars into a cash reserve somewhere to kind of build that up? Or had things slow down for you, you at least have the ability to spread out those revenues a little bit farther. So again, increase the efficiency of the use of your actual assets. Do you have the ability at this point to potentially, again, we mentioned this before, does it make more sense to sub out the work versus having your own team do it or vice versa, right? having temporary workforce versus the full-time workforce that you have. While no one wants to let team go in a slowdown, letting go of some of your team could, in fact, be the difference between the business making it to the other side of a slowdown and not. And so while no one wants to let team members go, it's something that you absolutely need to consider and potentially think about bringing in either temporary work or even subs to do the work, because it may be a little bit more cost effective to do it that way versus having your team. So it's the types of things that you need to kind of weigh what makes sense from your business's perspective, whether, you need to let team go, or letting team go now may benefit today, but it's harder to find people on the other side. So part of your overall strategy may be to keep your team. Again, it becomes what is the most beneficial for your business. It's not going to be the same for everyone's business, but again, you've got to look at your circumstances, your industry, where you're located, so on and so forth, to determine ultimately whether or not, again, keeping team, letting go of team, bringing in, subs or temps makes more sense. There are also alternative financing. You may be able to potentially or want to access some type of capital, i.e. some types of borrowing. Look at what your options are. It is a lot easier to obtain a line of credit in favorable economic conditions than it is in unfavorable. So you may not need a line of credit, but it might make sense right now, while things are good, to in fact go to the bank and obtain that line of credit now because things are going good. So that if you should need that line of credit, it's already there, that you can draw on it and utilize the cash at that moment in time, instead of things have soured a bit. I've now got to go to the bank, get a line of credit. Things are souring. I'm not showing the greatest financial picture. I'm asking to borrow money, and I needed that money 3 days ago because I needed to make payroll. So I recommend, if you are looking to borrow money, you borrow money when things are good in your business, so that you, in fact, have the option of, in fact, borrowing money. It's very, very hard to get a line of credit when your financial story is not necessarily telling the most advantageous storyline. So again, something to think about. With construction, you tend to work with clients who have a lot of assets, equipment type of assets. So are there options for changing the type of relationship? So are you maybe leasing equipment? While I don't necessarily love that as an idea from a financial business perspective, it might be a great stopgap for you to get you from point A to point B. So, is that an option for you to, instead of owning that very expensive piece of equipment that you're in fact paying a loan on every month, does it make sense for you to rent periodically when you actually need that piece of equipment? So does it make sense to let go of a piece of equipment, rent it when you need it, and then when things improve somewhere down the road, you can again determine again whether you actually need to keep that piece of equipment. Do you buy another one or just continue to rent? So again, those are the different things that you just want to think a little bit about. There can potentially be things like government grants and programs available to you. It's going to depend on what part of the country you're in, what type of construction, what type of business that you are. Again, there tends to be a little bit more offered when things slow down a bit. So it's just something to consider. It may not be a great fit for your business, but it's something that you want to look at and see, is that an option that I could potentially, get involved with some sort of government program or grant program or something, or grant or something that, if you had to pay it back after the fact, it gives you an option to, again, a little bit of a stopgap to get you from point A to point B until things improve a little bit. So the biggest, and I think the last thing that I really want to point out is really to stay informed. I know that in this day and age, there's so much information. In some cases, there's too much information, and it can be overwhelming, but just make sure that you're just following kind of on an overall general basis as to what's going on in the economy, and not only on a national level, but again, keeping your eyes on what's going on a local level. There can be times where it is, a, you might be in an industry, or you might be in an area where it might slow a little bit earlier than, say, on the national level. So you just want to keep your eyes on, say, that state as well as national level, just looking for those indicators that people are talking about. Again, the reason for this particular topic this week was, in the last week or so, there was, a jobs report. It was, not as high as they anticipated. They're talking about possibly cutting interest rates. There's a slow of hiring, this and that. Again, these are just little things on a national level. There may be nothing going on in your local, but it's just something to kind of keep an eye on. So that's, for me, I saw these indicators and thought maybe this is something that we want to talk about this week. So again, it's not a do or die. It's just keep your eyes on what's going on. Are you starting to see things happening in your particular, your part of the business world, right? Are you paying more for materials? Is it getting harder to get materials? Is it getting harder to find subs, right? Are there things going on? It's just things that you want to keep your eyes on so that you aren't surprised should there be a really significant swing in one direction or the other, and you've gotten ahead of it and you've made some decisions in advance. So, and again, as I've mentioned before, with diversifying your revenue and your customers, just adapt your business model, right? You want to stay as flexible as possible. Be ready to potentially pivot some of those services if you can, adding some, deleting some, the types of projects that you're going to do, what makes sense for you to, if some of you have been in business for a significant period of time, you may be able to reflect back to the last slowdown and look at what had happened. So are there things that you can take away from that, that you can either do better, or something that you just happen to see through that period and now you just need to be mindful of it? And you want to just make sure that you educate yourself and your team. You may need to take some of the team that you have versus laying them off and now kind of shuffling people around. Maybe some people are taking on responsibilities that they haven't previously done, or they have done in some way before, but not entirely. So you need to be able to adapt the roles that you have in your business. So it might require you in some cases to train up some team members on other things that they may need to do now, that they haven't historically done with that position. And again, fewer people possibly taking on a little bit heavier of a lift to get through a slowdown. So again, might be training team members on those types of things. So again, these are all just different things to think about. So to kind of recap, the things that you're going to want to look at right now, just assess where you are right now and see what is happening in your business. If you do not have a cash reserve, you need to build a cash reserve. Diversify not only your client base, but your service base. Can you do more types of services, so that it's not just one type of service, should that slow down? Now, again, you've got a spread between the different types of things that you're doing. Focus on your cash flow. That's not just the business has slowed down thing. You really should be focusing on cash flow management, everyone, on a regular basis, but you have to definitely have a greater eye on it during an economic slowdown. Tighten that belt. Don't be wasting the resources that you have, especially in a slower economy. You want to make sure that you tighten that belt, cut expenses, the unnecessary ones out, that you don't need. Think about, improving or strengthening the relationships you already have with your lenders at the bank, your suppliers, your subcontractors, so on and so forth. so that, again, should you need to utilize those relationships, you have them already built. And now there's a trust between you and that relationship where, again, there's an opportunity to potentially negotiate something. And then there are always to look at potential financing options. You do want to be careful. Again, the more money you borrow, the more you have to pay back. So it's something to think about. But if it was, the economy does slow down, it might be a stopgap option for you at that point in time. Again, something to consider. Not the best option for everyone, but something to think about. And the last is really just stay informed, so that you know what's going on. Don't be blindsided by what ultimately flushes out, in not only in your business, but in the overall, national and state economies. You want to make sure that you're, again, not the last guy to know, that you understand that there looks like there might be something on the horizon, and kind of being mindful of that. So as always, we look forward to hearing from you. If you have any questions, please drop them in the chat. Again, great to see you this week. Have a wonderful weekend, and we'll see you next week here on the Construction CPA's Coffee Cafe. Have a great day.